Good day traders, it's Monday, September 25th. This is Alan Hong, market analyst of GKFXPrime. So I'm gonna share my daily analysis through this video. And first of all, let's review the major market movements. So the first instruments we're referring here is the safe haven Japanese yen, against the US dollar in 4-hourly charts. So the US dollar index, which measured the greenbacks rank against a trade-weight basket of 6 major currencies, was later changed at 91.95 on late Friday. So it was snipping 5 days of gains against the yen as heightened tensions on the Korean peninsula bolstered the safe haven demand for the Japanese currencies. So the pair USD JPY was down 0.43% at 111.98 on late Friday, and was retreating from Thursday to month high of 112.7. So the yen gained ground after North Korea said on Friday it could test a hydrogen bomb over the Pacific Ocean after the US President Donald Trump threatened to totally destroy the country if the US was forced to defend itself or its allies. So the remarks added to concerns that the escalating rhetoric could lead to one side misinterpreting to the others, so with dangerous consequences. And the dollar hit the highest level since mid-July against the yen on Thursday after the Bank of Japan kept the monetary policy unchanged, and the move higher in the dollar was also prompted by the Fed's policy statement on Wednesday, in which it indicated that it is still on track to raise interest rate in December. Meanwhile, the sterling was lower against the dollar, with the pair GBP USD down 0.53% at 1.3509 in the late Friday's trade. So it was remained on the defensive after a closely watched speech by the British Prime Minister Theresa May gave few new indication on how Brexit will proceed. So May proposed a transition period of around 2 years after UK leave the European Union, during which time access to the single market will continue on current terms. The euro was dropped in early Asia on Monday, traded at 1.1932, down 0.21% as German Chancellor Angela Merkel faces a tough job of forging new coalitions that could see her lead a minority government as the far-right AfD party won a surprise game in votes and enters parliament for the first time. So the AfD stuns the establishment by finishing third and entering the parliament for the first time with 13.5% of the vote. So under Germany's mixed members proportional voting systems, the votes involved beyond the 5% thresholds needed for seats in parliament. So Chancellor Angela Merkel's CDU and Bavarian allies, the Christian Social Union, the CSU, won 32.5% of the votes, making them by far the largest parliamentary group, according to an exit poll for the broadcasters ARD, but that's down from 41.5% in the last elections in 2013 and lower than recent pollings. And their closest rivals, the centre-left Social Democrats, the SPD, slumped to 20%, a new post-war low. So Merkel now needs to work to form the coalitions, reportedly without the SPD, a process that will likely involve protracted negotiations. So last week, the single currency was touched the day highs after the robust economic data out of the Eurozone, which underlined the expectations for tightened monetary policy from the European Central Bank. In New Zealand, the Bill English National Party and the Labour Party will bill for the support of Kingmaker Winston Peters and his New Zealand First parties. So the pair of New Zealand dollar against the US dollar was changed hands at 112.48, up 0.44%. Having a tap in commodities markets, the gold prices was dipped slightly in Asia on Monday, is 0.07% to 1,296 and 60 cents a troy ounce after a weekend in which New Zealand and Germany went to polls to both produce results that pointed to lengthy talks to form coalition government and North Korea and the US ramped up a war of words and action as well. So the far-right AfD party won a surprisingly large percentage of the overall vote in Germany, finishing the third and entering parliament for the first time with 13.5% of the votes. So under Germany's mixed-membered proportional voting system, that was in well beyond the 5% threshold needed for seats in parliament. So elsewhere, a 3.4 magnitude earthquake in North Korea was raised the speculations of a new nuclear test as well. But monitoring agencies were split on whether it was a natural event or nuclear detonations. So last week, the precious metal was pushed higher on Friday, moving away from the previous session's 4-week lows as the risk aversions escalated in the US dollar fell amid the heightened tensions on the Korean peninsula. So the precious metal was boosted after the North Korea said on Friday it could test a hydrogen bomb over the Pacific Oceans after the US President Donald Trump threatens to totally destroy the country if the US was forced to defend itself or its allies. So the remarks added to concerns that the escalation rhetoric could lead to one side misinterpreting the others, with dangerous consequences. Many investors favor gold during times of geopolitical uncertainty. So even with Friday gains, gold price was ended the week down 2.09% after the Federal Reserve statement on Wednesday indicated that it is still on track to raise interest rates in December. So gold price is highly sensitive to rising rates, which leave the opportunity cost of holding non-yielding assets such as bullion, while boosting the dollar in which it is priced. Well, oil price was fell in Asia Monday, with the West Texas Intermediate crude price dipped 0.16% to traded around $50.58 a barrel as investors took profits following the supportive comments from OPEC and allies on Friday on the scope for rebalancing the market. So last week, the oil prices settled a bit higher on Friday, hovering close to their best level in months amid the optimism that the crude market was starting to rebalance. So the global benchmark closed the week with a gain of 2.2%, its fourth consecutive weekly climb, and a major oil producer convening in Vienna for an OPEC-led committee meeting on Friday, which was boosted to record compliance with their production cut agreement, but as expected decided to wait a bit longer to see if any further actions was needed. So OPEC and non-OPEC compliance with the deal to curb output rose to 116% in August, and the committee says a strong increase from the 94% compliance achieved a month ago. So the Kuwaiti oil ministers Issam al-Marzouk, who chaired the meetings, said the market is evidently well on its way towards rebalancing. So in May, OPEC and non-OPEC members led by Russia agreed to extend production cuts of 1.8 million barrels per day for a period of 9 months until March 2018 in a bid to reduce global oil inventories and support oil prices. But so far, rising production from the US, Nigeria and Libya has undermined the cartel's effort to curb the excess supplies. So Russia's energy minister suggested that January is the earliest date that an extension to the global accord can be considered, although other ministers suggested such as its decisions could be taken before the end of this year. So the committee next meeting is set for November 29 in Vienna, just a day ahead of OPEC regularly scheduled meetings. So elsewhere in the US market, participants mill over data showing the number of oil rigs continue to decline, suggesting a possible tightening in domestic productions. So according to the oilfield services firm Baker Hughes, said its weekly count of oil rigs operating in the US was declined by 5 to 744, and this was marking the third weekly decline in a row. The weekly rig count is a very important barometer for the drilling industry and serves as a proxy for oil productions and oil services demand. Now we're going to review back the highlighted economic data and events on Friday and last Friday, as well as the today focused data and events. So on Friday, the European Union has released its German's manufacturing PMI for September, which was better than expectations with 60.6. Okay, and also the speech delivered by the ECB President Mario Draghi was bringing some impact to the euro as well. So, okay, during the North American trading hours, Canada has released its core consumer price index for the August, which show a result of 0% growth, okay, slightly better than previous negative 0.1%. So besides of this CPI, Canada also released its core retail sales for July, and it was at 0.2% growth, which is disappointed compared to the expectations of economists at the 0.4% growth. Alright, so the last data on Friday is the US Baker Hughes oil rig count, which show 744 of rigs on the last week, okay, which is 5 more lower than previous of 749. Okay, so as for today, Monday, we only got the data from the European Union, which is the German IFO Business Climate Index for September, and it is expected to better than previous at 116. Right. So besides that, investor will focus on the German February election result as well as the speech that is going to deliver by the European Central Bank President Mario Draghi. It's technical analysis sessions, so first instruments we're referring to the Great British Pound against the US dollar in 4-hourly charts. So the sterling was dipped lower against the dollar in late Friday's trades and remained on the defensive after a closely watched speech by the British Prime Minister Theresa May gave few new indication on how Brexit will proceed. So looking into 4-hourly charts, it is remain ranging between 1.345 and 1.36, but however it is held in an uptrend structure, thus it is suggested to move further higher after with a closing above the previous high or the resistance level of 1.366. Then we could refill the next target at 1.377. As on the downside, with a closure below the support level of 1.344, we provide a signal to experience a short retracement. While the single currency was dropped against the greenback as the German Chancellor Angela Merkel faces a tough job of forging a new coalition that could see her lead a minority government as the far-right AfD party won a surprise gain in votes and entered parliament for the first time. So the pair EUR-USD was increased from the resistance level of 1.199 and remained ranging between 1.199 and 1.188. So closing below the Fibonacci retracement level of 50 or 1.187 will provide a signal for shifting trend directions to become downtrends. Otherwise, it is suggested to remain its uptrend structures, and only with a closure above the previous high or the resistance level of 1.21 will open up a door for further upsides. But however, it is expected to have low volatility until the release of the German elections results. Meanwhile, investors will eye on the German IFO Business Climate Index today, as well as the speech from the European Central Bank Mario Draghi for further indication on the monetary policy and business activity in the European Union. The kiwi was felt lower on the back of an ongoing political event in New Zealand. So in New Zealand, the English National Party and the Labour Party will for the support of Kingmaker Winston Peters and his New Zealand First Party. So looking into the pair and New Zealand dollar against the US dollar in hourly charts, a significant head and shoulder pattern can be seen with the neckline at 0.725. So it is rejected to fall through the neckline and rebound, providing a signal for further upside in short terms. So closing below 0.725 is suggesting for continuation of current downtrends. So on the upside, closing above the Fibonacci retracement level of 50 or 0.735 again only can be considered a signal for trend shifting to become an uptrend. Meanwhile, the Aussie has declined recently on the back of the FOMC included rise in the US dollar and comments from the Reserve Bank of Australia, Governor Lowy, pointing to a lack of urgency to raise interest rates. But however, the pair Australian dollars and against the US dollar is remain supported and traded above the support level of 0.793. So the both moving average line is remain pointing upwards, and this was signals to held in an uptrend structure. By referring the weak momentum in MACD indicator, it is suggested to be traded ranging between 0.794 and 0.812 for short terms. So falling below 0.793 we are suggesting for a short retracement and might fall further. And on the upsides, only with a closure above the previous high at 0.813 will continue its uptrend. As for the safe haven Japanese yen, so the US dollar was snapping 5 days of gains against the yen as heightened tensions on the Korean peninsula was bolstered the safe haven demand for the Japanese currencies. So the prior US dollar against the Japanese yen has took a brave below the resistance level of 112.7. So closing above this level is we're suggesting to continue its uptrend and move towards the next target of resistance level at 114. So at its long-term target, right? So however, referring to the MACD indicator, the both movement line cross and pointing downwards signal to have a small downside in short terms. Okay, so we could refer to the support level at 111.5. Commodities markets, the gold price was dipped lower slightly after a weekend in which New Zealand and Germany went to polls to produce results that pointed to lengthy talks to form coalitions government, and North Korea and the US ramp up a war of words and actions. So looking into 4-hourly charts of the gold price, it has fell through the psychological support level of $1,300 troy ounce, followed of formations of death crossed by both moving average lines. So only with a closure below the Fibonacci retracement level of 50 or $1,280 will consider as shifting trend directions become downtrends. Otherwise, it will still remain its uptrend structures. So on the upside, the first resistance level comes in at $1,300 troy ounce, then following with $1,322 a troy ounce. As for the oil price, with the West Texas Intermediate crude price was fell lower as the investors took profits following sporty comments from OPEC and allies on Friday on a scoop for rebalancing the market. So it took a brave below the resistance level of $51 a barrel, but however the both moving average lines remain expanding upwards, so suggesting to remain its uptrends structure. So while referring to the weak momentum in the MACD indicator, so signal for a short-term ranging trade between $50 a barrel and $51. So closing below $50 a barrel only will consider to have a short retracement. So on the upsides, the bull will only continue with a closure above the previous high at $51.10. That's all for my analysis to date. Please don't forget to subscribe to our YouTube channel by clicking the GKFXPrime logo on the screens in order to follow our updated analysis and education video. Thank you for watching.
GKFX, your global trading partner.